Well, we're back. Sorry for the hiatus, guys. Real life happens sometimes. Sick kids, just busy in general. And just when I did have the time, I was just exhausted, didn't have the energy. I'm sorry for telling you a video would come and a video would come the next day. The next day it didn't happen. I take accountability for that. I shouldn't promise you things without delivering. So that's on me. I'm sorry. And I'll do a better job of that in the future. But for right now, we will get you the update that you need and that you deserve. As always, timestamp down below. You can skip to whatever part interests you the most. But before we carry on, I really want to talk about something that's happening out in the world right now. And this is the recognition that the COVID vaccinations were a giant scam. And I think that this is important to talk about, guys, because, well, it's multifaceted. First of all, it should be a giant wake-up call to how the world works. You know, on this channel, in these markets, I talk about the difference between reality and narrative a lot, okay, and the truth versus what you're being told. And the way that we navigate these markets using that understanding of reality and how it works applies to everything, including politics, including science, including just about anything that's relevant and matters in the world today, okay, especially in terms of leadership and official sources and so on. And so it's important that as these experts who got everything wrong now begin to roll over and ask for amnesty for pushing this, experimental drug, which is exactly what it was, on the global populace, like they did, threatening to ostracize you from society, force you to lose your job. I mean, this was extraordinarily tyrannical in every way. And, I regret, like I said, not doing this channel before, because I feel like I'm quite sure had I been active in talking about these things as they happen, maybe I could have helped prevent some of you from falling for this scam in the first place. Maybe some of you would not have taken the shot in the first place, which, as is now self-evident, you never needed. In fact, you are now at more risk for having taken it than if you had never taken it at all. The long-term side effects are still being studied, but they don't look good for the max vax, especially those who took multiple boosters. And so this is all pretty egregious. And don't forget how these people treated you. And this is important because as they now ask for amnesty, they do it in a very deceptive way, because they try to take the vaccinated and the unvaccinated and put them in the same group and say, well, hey, we just forgive everybody and just let bygones be bygones. And that's simply not going to work. That's not how it works in the first place. First of all, we are not equally guilty of the same crimes. The unvaccinated largely respected the rights of everyone to make their own choices, and encouraged everyone, including those who were pushing the vaccines, to do more research and to consider more sources that were largely being censored and banned from the public view. Okay, and this is very important because all of these sources, whether it's people, individuals, Chris Martenson, among many, many others, or various doctors, you all know who they are, were being censored. And the studies that they would talk about would be censored. And you weren't allowed to share this information, which was right. All of this information was correct. So the correct information was censored, and it was called disinformation. Meanwhile, all of the propaganda was pushed forward as the truth. And here we are now at this point, after so many people have made the decision to take this vaccine, that they're now learning that they were duped. And I would encourage you, if you are one of those people who got duped, to first understand that you were wrong. All right. And that's okay. We all make mistakes. I made plenty of mistakes, believe me. All right. But part of making a mistake is realizing that you did, so that you can take ownership of it and correct your course in life, right? Because you don't want to keep repeating the same mistake over and over. And why this is so important right now is because even if you did get duped in this vaccine scam, I can assure you that it won't be the last opportunity you have to get it right. Because just like this pandemic and just like this vaccine, I can assure you something else is coming along the way someday, and you will have an opportunity then to get it right. But if you can't recognize to this point that you got something wrong, you basically stand no chance of getting it right next time, especially when this time is so apparently obvious that it's really inexcusable not to get it right at this point in time. And so you have to understand that and get that right. And then once you do, you need to do some internalization. Okay. And I'm talking to you directly as a friend. Okay. Because I mean everything I say, and I'm saying it for the right reasons. It's that you need to understand how you came to the conclusions you did and why you were misinformed. And from there, you can start saying, well, maybe it's because of these sources told me and I trusted him. Well, there you go right there. That source, whomever it might be, is officially worthless. I don't care if it's a doctor. I don't care if it's the government. I don't care if it's some scientist, some reputable journal. I don't care. If they got it wrong, they need to be cut out from your life. You need to cut them off permanently. All right, because they are dangerous to you and your health, obviously. Okay, and to your critical thinking and making good decisions. Okay, they steered you in the wrong direction on something that never should have happened. It is inexcusable. They must be cut off, especially if they don't apologize, especially if they don't come out and take ownership for what they did with a really good, honest, earnest explanation. Maybe they did get it wrong on an earnest, honest point of view, right? Maybe they were genuinely believing the things that they were saying, and now they can intellectually be honest enough to say we got it wrong. But few and far between, I'm sure, will come out of the woods from that degree. So you have to cut these people off as so you cannot be deceived again in the future. This is extraordinarily important. And then you have to consider those of you who had people in your life telling you the right thing, why you didn't listen. All right? And I really want you to process that stuff and try to figure it out. I really do. I'm being honest. I want you to think through this. Think through this. Stop allowing things to be introduced to you and start deducing things inside of your own mind. Okay, first, come to your own conclusions. Stop allowing outside sources to feed you everything you believe. Think about things internally and come to your own conclusions. Do more deduction. All right. And then from there, you can start your journey to recovery and working on being a more critical thinker, because this is going to be more and more important as time goes on. I can assure you of that. The world's going to get more crazy, not less crazy. And we have a lot more obstacles coming in our way in the future. So with that being said, I want to say that these people who forced, especially the official sources, right? The governments, the media, the scientific community, and so on. All these people who force these things on you, and especially those who put consequences in your way, and this could include employers, by the way, businesses, who punished you for not going along with this thing. And maybe you were thinking for yourself and you didn't want to do it, but maybe you caved in anyway for the safety of keeping your job or so on. These people who forced you into these decisions must be held accountable. Okay, they must be held accountable because it was tyrannical. Okay, in every sense of the word. And just this concept of blanket amnesty, grouping everyone together, the innocent and the guilty together, saying, oh, let's forgive each other. It's not how it works. Forgiveness works by recognizing you were wrong, all right, and then admitting you were wrong and saying you're sorry. That's how forgiveness works. And then you repent, right? It means you don't do it anymore. It's like, okay, that was wrong. I'm not going to do it anymore. It's like if you have a teenager and they keep going in mom's purse and stealing money. She's always like, oh, okay, don't worry about it. I mean, what is she doing? She's promoting the behavior. I mean, she's complicit in the behavior. She's going to make the kid just be worse and worse, as opposed to confronting them, saying, what the hell are you doing? Stop stealing my money, and making this teenager come to grips, right, face to face with what they've done and think about it and the hurt that they've caused their mother or whomever, right? And then coming to an inevitable position where they have to think about what they've done and decide whether they're going to apologize and repent and feel bad, feel remorse for what they did, or just continue down their own path, at which point the mother now has a different decision on what she does with her child and how he was raised and what the punishment might be, et cetera. But everyone must have the opportunity to be forgiven. This is part of who we are as a people. We would not function in society if we didn't forgive each other. We all screw up. We all make really big mistakes, right? None of us are perfect, okay? And, as a Christian, this is something that really means a lot to me. It's important that we forgive each other, even if in a situation like this, something super tyrannical, we still have to have the capacity to forgive, but it's not forgiving for the sake of forgiving, okay? It's forgiving because this person admits that they're wrong, okay? And then you take the steps from there, but you don't just arbitrarily forgive, okay? They must be held accountable. And the people who are in positions of power must lose power. The people who run businesses, who force these things on people, right, and went along with the governments and everyone else and didn't resist, right, they must be held accountable. These people must lose their jobs. This is unacceptable. Unacceptable. I want you to think about this. These people forced you to take vaccinations that were experimental, that didn't prevent you from getting the disease, and didn't prevent it from spreading. Meanwhile, people are getting myocarditis and all kinds of crap, right? They're dying, but because they go for a run, they go for a jog, and they keel over dead because they have a heart attack. This is unacceptable, right? It turns out all the people who got sick from that crap are the people who were max vaxxed. All right. This is not acceptable. These people must be held accountable, and this must be said, and it must be shared, and you must be offensive with these concepts and these truths, because if you are not offensive and loud with these kinds of truths, then the truth won't make it out and the truth won't win. So I encourage everyone to be loud and obnoxious with the truth, as loud as you can, and make sure that these people know that they must and will be held accountable, whether it's the loss of their job or whatever it means, but they must be held accountable. By name, okay, and they have completely lost all credibility in society, okay, especially if they don't confess what they did was wrong, recognize why it was wrong to do that to people, all right, and repent, okay, because absent that, these people must be rejected from any position of authority or power, especially in our society. So I just wanted to get that out there. So let's get to the charts. Okay, guys, we're going to start with the broad indices here with the Dow, which has been on a rip for the last 4 weeks, up now about, say, 14%. So quite a good run this month. In fact, I think the month of October will be its best month in history if it closes up around these levels, certainly very close to it. But you'll notice two very clear things right away. First of all, we're in this descending broadening wedge, all right? And this could break either way. But the way it came up and the way it's coming down typically suggests it breaks to the upside. However, in this macro, we'll have to wait and see. I wouldn't count on any of these probabilities right now. I would just wait and see and be patient. Don't FOMO anything in these markets right now. You have to be very careful. The second thing you may notice is that we're coming to the top of this upper resistance on the said trend, right? And so it stands to reason also, as about the time you get above this 50, which it's done, it starts rolling over, right? So it gets back above it, but it doesn't last too long. So now you essentially have this double confluence of resistance here. Breaking out would be significant, all right? But for now, you have not done so, and there's no reason to believe it's going to do so. And so just hang tight and let it see what it does next. But I will point out to you on the monthly chart, we're going to get this monthly candle. It's had a nice rebound on the 50 on the monthly. But it's pretty much the same picture. You have some divergences here. This is a medium divergence, all right? And so we're flush, all right, on the RSI, but we're descending on price, all right? And so that is a medium strength divergence, suggesting that it's going to roll over and sell. Of course, it's close enough. It could correct. It could break up higher both ways. But for now, it is a medium strength negative divergence. Moving on to the NASDAQ on the monthly. So there's some confluence here. I mean, if you just zoom out and look at this chart, it really does not like to lose this 50. I mean, right? You see that. It's very clear. So this is a pretty important chart to look at. And once you do lose the 50, you see what happens. The last time that happened was 2008. Even the COVID crash didn't manage to break it. And we are breaking it right now. We have actually already broke it. We are trying to close back above it, which it's in the process of doing. But this looks pretty precarious. When we zoom in on the weekly, we can see that it's struggling with the 200 there. Once again, if you zoom out, it tells the same story. Once you lose the 200 on the NASDAQ, it's down, baby. So pretty precarious for the NASDAQ right now. Critical to get above this 11.5 level and start to rally. Otherwise, if you lose it, you're going down, and it stands to reason that's what we're going to do. Not to say that we can't get another rally up to, say, the 50 again. Okay, so that's a little bit higher from where we are. Call it 12%. But the look is negative, and with this macro and inflation, I would expect it to get worse. Moving over to the S&P, similar situation. So you can see that we've managed to recover and get above the 200. This is the weekly time frame. And so we have a little bit more upside if we were to retest these upper resistances, very similar to what the Dow's doing right now. Same circumstance, you get denied at this upper slope, and you also get denied shortly after getting above the 50. Okay, so that gives us maybe on the high end 8%, 7-8% of upside. So let's call it 5 to 8% before we get a real test. But you really have to imagine that this is a bear market rally. I think the markets are largely rallying here in anticipation of a Fed pivot, if not an equivalent. You may have seen a lot of speculation that the U.S. Treasury may come out and do what will effectively be QE without the Fed being involved. They're getting into some sneaky tactics here. And so the Fed may end up pivoting without pivoting at all. This could be kind of curious where everybody gets this wrong. So the people who believe that the Fed will pivot, like myself, end up being wrong. And those who believe that they will never pivot end up being wrong because it's actually the Treasury who does the pivoting. It could be curious nonetheless, but the effect would be the same. This would be a capitulation to inflation. This will certainly encourage more inflation. Inflation is not going away. Once the market really understands this, it really just has more downside to go. I will also remind you that historically when the Fed pivots, that means lower markets, not higher, even though the immediate reaction might be higher. This is also going to be a pretty big signal for commodities. So broad markets getting a nice bear market rally here. The Dow is really the only one threatening to do anything significant. But if it's going to do that, it's going to need to do it in the near term. It's already at resistance. I think by and large, you're just seeing the broad markets rally here in an overall bear market. Nothing too exciting here. Nothing has changed. We're still sloping downwards over time, and I would expect that to continue for some time. Okay, guys, let's do gold and silver. Starting with silver, a couple of things are pretty apparent, right? I mean, short term, we are in an uptrend, actually. So even though it may not feel like it on a day-to-day basis, since September, the price is going up over time. And that is a good thing. Even though it is in the short-term time frame, you have to start with short to get to medium to get to long. So it's a positive thing. The medium-term price action is down, right? We still have to break this trend line. Though really, the area we need to break to truly break out in silver, I still contend, is 2145. Once you get above 2145, you're off to the races, especially if you retest it and break out again after doing so. So that all looks quite good to me. The negative that I will say is that I hate to see it, but this is an ugly head and shoulders forming on this trend line here that could end up being a neckline. So that's something to watch too, right? So you're getting some ambiguity in the silver price. Short-term uptrend, but threatening to break down on a head and shoulders, which would bring you to a minimum 1742, if not 1610. And I will tell you right now, I'm pretty awful at the silver spot price. I'm much better at the equities and finding the bottoms in the equities, but I tend to always get the silver price wrong. But I will tell you this, in and of itself, the silver chart is a little ambiguous, like I said. But when you look at it in conjunction with gold, it kind of paints a more clear picture that it looks like it kind of wants to dump. And so that would be almost bittersweet, right? We knew that this could happen. I've been talking about it forever. The target, the true technical target is 1530. Although I will catch the knife personally at about 1550, right? So if and when gold hits 1550, I will be catching the knife there. And again, look, that's only 5%. You understand? 1530 is only 6%. Now, what's interesting about this is that if we were to get that sell-off, which in percentage terms isn't that much, when you think about the leverage play with the equities, there's actually a good bit of confluence right there because most equities would have to sell off 12 to 15% to reach their prior lows. So 3 times the move in gold would be about 15%. And that's about what the equities have to fall to retouch their prior lows. That's why I think that these equities are not going to hit new lows. At least most of them won't. I think some names will. Some names are already resting on support. It really varies. But by and large, sector-wide, with the big names, the big caps, right, the more well-known names, those guys aren't going to make new lows, I don't think. Okay, guys, so let's look at the gold and silver equities now. We'll start on the daily and work our way out to the monthly. We've been looking in anticipation for the development of this head and shoulders. All right, so this is pretty clear. You see it in confluence across the board and pretty much every single name in the space. And so it looks quite good from that regard. But as we kind of approached and test, we are threatening now to fail. This could just be a little bump in the leg that goes up to the neck. It's to be seen. All right, but for right now, I'll say it's very positive that we have gotten a rest and a retest above this 50. Right, as you can see, the moving average is starting to work its way around and turn net neutral, if not positive. So this is a good sign. The gold and silver equities do look pretty good. You don't see anything wrong with them. You don't see any bad patterns. In fact, you see mostly bottoming patterns, right? Whether it's these inverse head and shoulders, just straight up bowls. You don't see any divergences on the RSI or anything like that. Everything looks pretty good, okay? And they're all slowly working their way up. It really feels like we are accumulating in a bottom here, even if it may not be as fast or exciting as you would like it to be. In fact, it's getting quite boring, and that's actually a good thing. It is for this reason that I use the word accumulate, and I did so intently with purpose, right? Because we knew that this zone was exactly this. It was an accumulation zone, and you never know when that catalyst is going to come that really takes things off. It's just a day away, truly. And anticipation of that, you really got to be accumulating in here, especially on sell-offs. All right, but you don't want to go all in knowing full well that you could still have a liquidity event. All right, and as it looks like the gold and silver price are going to sell off, it is very interesting and curious to me where the equities are, because they're outperforming the metals. And this is telling me something. In fact, I called this similar event happening in uranium. So if you look at this initial sell-off right here, which happened in April, when we got this bounce right here, I knew that this bounce right here was simply a broad market rally, and the uranium space was getting the space it needed to fall all over again with the broad market sell-off, all right, without losing its bull trend. And that's exactly what happened, right? We knew that that would happen. We knew that we would retest this, okay? And I think you're seeing something similar here, because where gold, for example, has, say, 4 to like 7% to sell off, okay, well, most of the equities have about 10 to 15% to sell off to retest their prior lows. This is why I think, guys, that we're not going to make new lows. I think if we get the sell-off, if the metals break down, that's all you're going to do. All right, you're going to come down, you're going to retest lows, and that's if you break your trend lines. I think the metals actually look quite good. I think the equities look quite good. I think this is the right time in the right sectors, right, in the right macro, with the right sentiment being, in the dumpster, with the right valuations being absolutely oversold. This is not just a contrarian play. This is a common sense play. This, this is just an extraordinary opportunity, and it's at the cusp. And I think when you look at an equity like AG, it really helps paint a better picture for you, because first of all, look at this pattern right here. This is a nice bottoming pattern. That's what we're doing. We are bowling, and all the technicals look great. All right, it is slowly advancing. It's turning up its moving averages. It's holding above them, right? It's managed to put in an accumulation process along this 20-year historical trend line, which is very significant. All right, so coming out on the weekly. In the past, it has been capitulation moments that led us to the trend line, which led to V-shaped reversals. Here, we're actually accumulating, all right, and bowling out. And this could actually be a testament of what's to come, right? Because this was not accumulation back here. This was, just straight buy it and rip it, right? This was just a rip it event. But the fact that you're now accumulating here could be a testament that what comes next is going to be much more long-term. And I think the market appreciates that, all right? Nobody's buying in fear, just jumping in real quick. This is an accumulation moment. And I think that's pretty clear. And I could be reading some biasness, some net bullish bias into this, which I will admit, confess to, and try to check for myself. But at the same time, if you just look at the chart, it's pretty clear. Nothing is broken. Everything looks pretty good. And even on the monthly chart, guys, it's doing the same thing. You really have no choice but to like what you see. And look at the volume continue to accelerate on the monthly. I mean, the volume right now is the 4th highest ever. How do you call this much volume, right, over this kind of a time frame anything but accumulation right where it is at this moment in time? I think it's pretty clear, guys. It's pretty clear. So the weak hands are getting out, and smart money is taking it hand over fist on what is an historic trend line with historical analogs, and all the stars aligning at the right time for what's to come next. I'm quite convinced of what I see. You don't have to read too much into it. It's all pretty clear, and I think it looks quite good. All right, so let's come back into the daily and move on. We're looking at something like PAAS. It's really the same thing. If you were to get that sell-off, I mean, look, you're seeing it again. It's about 12%. I don't think that if gold sells off 6% and goes to 1550, that any of these equities sell off more than 12 to 15%. I just don't see it. Right? Even looking at something like Silvercrest, which is interesting because it actually is still technically forming its right shoulder. It could still come up here and make this, which is interesting because when you look at Agnico Eagle, it's riding up here. All right, so it's something to watch. The pattern technically hasn't failed yet. It's just something to watch, okay? In the meantime, if you were to break down on Silvercrest, coming to set new lows is 10%. Coming down to trend lines, 15%. And so I think this is what you're looking at now in terms of downside. Now that we've gotten this massive rally over the prior pivot low, you're not looking at anything more than, say, 10 to 15% downside from here in the event that the metals sell off to their next support levels. And so I think you are still green light for go to accumulate in the gold and silver space. I'm not selling anything. I have not sold anything with the exception of one play. I did sell some Silvercrest as a swing thing, and I need to get back in it, but I still have the cash. But other than that, I'm holding everything that I bought. I mean, dude, we're still up like 30% in AG from where we bought it. And let me tell you something. We come down here. If we come down here to 650 again, I'm absolutely buying. I'm absolutely buying AG if it comes back to 650. It's just a no-brainer. That's 20%. I just don't see it breaking these lows, guys. I think that this is exactly what happened in uranium. The rally has been so substantial that if we were to sell off from here, the lows are already in. All right, it will be another buying opportunity, but you don't have to worry about where you are. Okay, so stop worrying so much about price. Look and see this for what it is in terms of time, and just know that it's coming. All right, so just be accumulating with confidence, especially on sell-offs, with these 10 to 15% downside targets in mind, broadly speaking, and just be ready to strike in confidence. Be looking for gold at 1550 to swing while the hammer's hot, baby, and pound that steel, because it's time to forge your weapon and get ready for the next fight, because inflation's not going anywhere. It's a dragon that cannot be slayed, and we're going to be fighting this thing for a long time. I think it's testament. I think investors know. I think that's why they're accumulating rather than ripping. I think what's coming is going to last for a long time. We are going to break all-time highs in a lot of these equities like AG, and you're gonna get something like this. I'm just convinced of it. It's all there. It's not even that far away to get to all-time highs, right? Or is it back here? Hold on, let me zoom out. Let's check. Let's go ahead and check. Let's take a little look-see together. All right, so all-time highs, 200%. It's nothing, man. That's nothing. That's just getting started. So if you come back down to 650, that's 323%. I mean, that's just nothing. That's just absolutely nothing for what's coming. So definitely looks good to me. Accumulate with confidence. Everything looks good. Okay, guys, let's get some monthly candles in the uranium space. We're going to start with the physical spot price, which currently stands at $52.35. As you can see, after a nice run up here, we have essentially traded sideways, battling with a small level of resistance right here that's pretty clear. I mean, you could put that on a chart. We'll thin this out a little bit. But that's a pretty clear level that I struggled with in the past. All right, so call it $53.65, say $54. Once you get above that, the spot price then has room to ramp up to say $74. But until then, you are at resistance, and you have your work cut out for you. You are pretty hot on the monthly on the RSI. Not to say it can't get hotter; it certainly can. But you would rather not see it be that hot. When you come into the weekly time frame, I will show you that you do have some small divergences on RSI here, even from here to here, which told you that sell-off was coming, and then even from here to here, which might tell you another sell-off is coming. Remember, you have the divergences as you're coming up to resistance. So, I'm not telling you uranium looked bearish or anything. I'm just telling you that in the immediate future, it's fighting overhead resistance before it can break out and truly go to the next level. And you see the same thing actually when you look at the SPUT physical. So you had some divergences playing out here, which have kind of corrected themselves. This is the weekly chart. Let's take a look at the monthly. All right, so let's get rid of this guy. The monthly looks okay with the exception of one thing, and that is the lack of volume, which continues to decrease over time. That's not a good look, especially as you're breaking out of this key level of overhead resistance. You would really like to be doing better than this. You can see it a bit more clearly on the weekly time frame, right? I mean, this is clearly a level of resistance at 1680, and a lot of you guys were calling for this inverse head and shoulders pattern, and we talked about this, right? Okay, so you have this guy right here, and I pointed out to you the problem with it, right? The problem was, first of all, the volume and the way you broke out is very similar to those Japanese restart breakouts of the inverse head and shoulders in the equities. I knew that wouldn't last. I knew that it would sell off just because of the technicals alone, and that's exactly what happened. It sold off quite a bit, and this is very similar look, okay, especially on the daily chart. All right, now you can see this clear divergence right here, can't you? So that's not good. You at least probably have to sell down, retouch that 50 again, something like that. Not to say it's a horrible investment or anything like that. I'm just telling you, it's a little overheated in the short term. You're seeing a confluence in multiple views of the spot price, right? Whether it's the spot price itself or the SPUT physical, telling you that at least in the short term, it needs to take a break. You can also read into some things like this. So that is a bearish pattern right there, telling you you're going to break down. Couple that with the divergences, you likely do have a breakdown. Okay, so let's say we break down. That's at least 7% to the 50. That's call it 13% to the 200 and 15% back to the lower ascending trend line. So if I were you and you want to buy SPUT physical uranium, which is technically my largest uranium holding, I'd wait. Continue to be patient. There's no real reason to FOMO in this thing. In the short term, it has some selling to do. Long term, it's still going up, but you need to be patient. Okay, guys, starting with uranium, we will start, of course, with Cameco. All right, we'll do it for two reasons. First of all, it is the bellwether of the sector. It is the flagship. Okay, it is the flagship and the bellwether because it is a producer, and they have actual customers, and they actually produce uranium and sell it for money, right? They have income, they have revenue, all right? And this is something that very few of these names can actually say. A lot of these names, a lot of the things that you're investing in are still exploration companies. They're still highly speculative, where Cameco is an established name doing real business in the real world, and what it does is significant as a tell for what will happen in the rest of the sector, right? So we will focus today primarily on Cameco. Now, if you remember what I told you in the last update for the bull case, all right, on the other hand, if you are able to get back in, maybe you come back and get to that 200, and then you fall back and retest the trend and then start rolling back up, that would be ideal in a bull case. you can see that this is kind of playing out. At least it's going the right way, right? This is actually happening exactly like we said it would. So you came up, you're hitting resistance, all right, and now you're coming back to retest this trend line once you made it back in. All right, so now you're at a critical moment for Cameco because you're halfway there on the bull case. You're halfway there. You've made it back in. You got turned around at resistance. Okay. And now you're retesting support. So this support has to hold if you want to maintain your bull trend, because I can tell you, if you lose it a second time, it's going to be very ugly. It's going to be a pretty negative sign, to be completely honest with you. I will also tell you this, it has its work cut out for it, because you can see we have some short-term trends right here, right? Well, if you just look on the daily time frame, this is essentially 3 levels of immediate overhead resistance. It has not only the 50, but also the 200 and this descending trend line. All right, so that's a lot of work cut out for it, as it's really struggling with its long-term bull slope as well. So it's doing what it needed to do, what we talked about last time. But as of right now, it hasn't actually confirmed anything. It's still going through the motion to give us that answer. So for now, you must continue to remain patient and see what happens next. I can tell you, you have not missed out on anything. Do not worry about this price action, okay? Because it would be better. It would be better and wiser to buy it here on a breakout with volume, okay, and catch that run, than to just hope for the best and buy it now and let it fall out from underneath you, okay, which it has a real risk of doing. So you need to continue to be patient. I mean, just look, think about it like this. You only have 2 weeks, the 14th of November, okay, to come to the end of this apex, all right, which it will inevitably make a decision, all right? So just give it 2 weeks. Give it time to kind of run through here and allow it to decide what it's going to do. There is no reason to FOMO. There is no reason to get ahead of yourself. Now is exactly the time when you wait and see what happens next, okay? Because you're a day away from making significant changes in the direction of your long-term trend, okay? And so let's say you were to break out. Well, okay, start working on 2660 again and break out above there, all right? But if you break down, you're likely at minimum retesting $21, okay? And below that, probably 18. So now is a time to really be patient and continue to let it develop and see what it does. Looking at the weekly time frame, we are closing below the 50, all right? So you have another immediate resistance there that it could not get above, right? It could not close above. It got denied with a long upper wick last week, okay? And it's struggling to hang on to the long-term bull this week, okay? So zooming out even further on the monthly, all right? You could see that it has a nice lower wick there, trying to hang on to this trend. So no matter what time frame you look at, it's telling you the same thing, which is that you need to wait because it's working on figuring out what it's going to do. So I know so many of you are waiting for me to give you that buy signal to tell you now's the time to get back in. But I'm not going to do it just because you want it. We're going to do it when it's right, or when the charts tell us, or there's a high level of conviction. You don't have to be afraid about missing out on anything right now, guys. You really don't. I mean, look at the confluence again on the monthly with that $18 level. It's getting stronger and stronger. We'll just have to see. But, I will reiterate one more time. Don't FOMO. Continue to be patient and wait. And it's all going to work out. But you haven't missed anything. It's only gone halfway through the bull case. All right. And it's a day away from turning bearish. So be patient, wait and see, and we'll follow up. I'll put out, a flash update if I need to, if something dramatically changes. But for right now, it's got its work cut out for it. Breaking either way will be highly significant. So next week will be quite critical for Cameco. Taking a look at the rest of the space real quickly, URA, we talked about this head and shoulders pattern in confluence throughout the entire sector. Obviously, it did not play out. This is why you don't actually trade patterns until you get the breakout. So it never even broke out or broke down. It just turned around. And so the pattern simply did not play out, meaning it was net neutral. which means you just treat this quite normally, right? The only real pattern that broke down was LEU, okay? And this actually got a reversal. So this looks quite similar to the US 10-year. So take a good look at this right here, okay? Now look at the US 10-year. That's what that did. And you remember what I told you about LEU and how it might be a signal for the rest of the sector? Well, it looks like that's what's happening. It was a signal. It was the leader because it did it first, and it got a strong rally from here, okay? So the head and shoulders pattern did not play out. However, just because it didn't play out doesn't mean you should go run out and buy. In fact, look at the obvious divergences that took place here, right? You see that? This was telling you that it was going to fail here at the 200 and turn back around. So you're still, it's not doing anything significant. It's just trading, okay? It's not really risking taking off, and it's not really risking major breakdowns anymore. The charts actually look quite better than they did here, right? I mean, that was pretty ominous, right? So it's recovered, but it's not done anything meaningful that you should just sort of rush out and start buying it, right? It's better to wait for something more meaningful to present itself before you go out. And look, you see these divergences all across the place. I mean, look at deep yellow, all right? It put in these divergences and now it's rolling over. You see the same thing in, say, Lotus, right? Lotus is doing the same thing. Strong divergences telling you a sell-off is coming, right? So this is not to be ignored. And this is something we've seen in the past as well. Remember, part of what I told you guys the last time that uranium failed to break out was I saw how the sector was decoupling from itself. Because remember, uranium loves to trade in confluence with itself. It loves to be in harmony with one another. And when you start to see these divergences with some things being a little stronger and other things being a little weaker, that's a bad sign for the sector because it's not in harmony. It's telling you there's a lot of indecision, and you especially see it in the lower market cap names. People are getting out. The buying is weak, and it's just telling you that the rollover is coming. And as you see Cameco really struggling here, and it could break up, all right? I don't know what it's going to do. All right, I can tell you that it has its work cut out for it. So going higher is at a low probability of going lower, but it could go either way. You just have to wait and see. But in summary, I will tell you that you haven't missed anything. I'm quite sure that until you get that decoupling from the broad market, you'll trade with the broad market, and the broad market has lower to go yet. We're not done with that whole thing. I stand to believe that the catalyst to bring about the true decoupling in uranium will occur one of two ways. You'll either consider March 2020, all right? Consider something like that. You get a capitulation low right now. That's a psychological event. People start thinking about where to go next. And obviously commodities at large stand to benefit from this change in market psychology and investor sentiment. It's becoming more and more obvious, especially energy plays, oil included, that these are a part of life and they're underinvested and we need to get in here. Everything about the uranium thesis is real and it's solid and it must be owned, but it must be owned at better prices. So in conclusion, guys, just be patient, all right? Don't do anything yet. And we'll go over some of the specialty names real quick. SMR, we knew that it could come down to at least the lower trend. It managed to bounce there and fall out. And then after falling out, it retested, okay, and then got back in, which is a good sign. But just like Cameco is doing right now, right? This is what I'm trying to tell you. Once you get back in, you have to pass the retest, all right? Because if you fail the retest, what happens? It's much more downside, all right? So SMR looks bad, all right? I would not be touching this right now. At least let it play out and see what it does. But it is too early to be catching this knife. You could potentially see more downside here. Even on the weekly view, that is some ugly volume. There's not a lot of interest down here. You just have to wait and see, though it does have a moving average right there. You just need to be patient, okay? So let's switch over to LEU. All right, so we talked about this. It failed its breakout or its breakdown, however that works for you to understand. And it's gotten a nice rally since. However, I would not chase this. I would continue to be patient here as well. You're getting declining volume on the run. It's getting pretty heavy and hot on the RSI already. And, in confluence with the rest of the sector, you really need to wait and see what it does. And in terms of Silex, it still has room to fall too. Once it lost the 50, it has failed to get it back. It's essentially trading sideways, and that's fine. There's nothing wrong with that. But I will reiterate to you one more time. The critical thing for Silex is the weekly timeline. All right, you have to let this 50 catch up, or you have to sell down to it. I don't care which happened first. I don't care where they are when they meet. They have to touch. You cannot consider buying or adding in the Silex until one of these things happens. The price must touch this 50 before you do anything.